Well, it's another exciting day in the ag commodity trade. We want to welcome Brian Hoops to the show. He's with Midwest Market Solutions in Springfield, Missouri, and talk about what's going on in these markets here. All kinds of rumors being very active again related to coronavirus. We were hearing some rumors this morning that maybe now it's in Switzerland and Spain and Austria. Even heard one report of maybe a high-ranking health official in Iran that now has tested positive for it. Lots of rumors flying around. The markets are kind of in a tizzy this week. And Brian, let's take a look at the corn market right now. We started out a little higher. We were trading 2 or 3 cents higher overnight. We're back to unchanged. It was a little bit lower last time we checked. March steady at 372 and a quarter. December also steady. So everything's kind of in a holding pattern here. If you look at the soybean market, so far on soybeans, let's roll over there if we can. And we have the March now 3 1/4 higher at 877.5. So after a quick sell-off after the open, it's kind of getting its legs under it again. September up 3 1/2. And let's take a look at the wheat market. Right now on the wheat, we currently have Chicago March down 2 1/4. We're at 534 per bushel. July down 4. Kansas City wheat at the present time, let's check it out. We have the March down 1 3/4 at 450.5. July new crop down 1 3/4. It's at 464 3/4. And moving on to our Minneapolis wheat market, we now have March trading 1/4 cent lower at 513 3/4. There for a while this morning, it was trying to trade a little higher. It's bouncing around on either side of unchanged through the day here. So, Brian, what do you make of all this talk here? A hard sell-off yesterday and attempted a rally this morning, and then it just seems like it ran out of gas, although maybe it's making a second run here right now.
Yeah, I think the thing that is working in our favor as far as corn and soybeans go, Marlon, is we have not taken out yesterday's lows, and that's giving us a little bit of a reason to see some short covering in this market here. Soybean meal seem like they want to tell a story that once we see demand start to return to the United States, maybe if we can get things going back to normal as far as with China, if they can get things under control, they start to rebuild their hog herd, there may be some demand for soybean meal, maybe some corn that they're going to need to rebuild their herds with, and demand will start to pick back up. But we don't know if that's going to be in the next several weeks, several months, 6 months, when that's exactly going to happen. Right now we're seeing a slowdown in soybean exports, which is pretty normal for this time of year. Corn exports have improved. The inspections number that came out yesterday was marking year high for corn, but those exports are probably going to start to slow down as we get into March and April. So it's a real struggle here to mount any type of a real strong rally or even a reason to rally corn and soybeans at this time. We're seeing wheat market pull back a little bit. They have taken out yesterday's lows, and that has produced some technical selling.
Starting to see a big sell-off in the Dow right now. Now we're down 380 points, and that that had a high earlier of what was it, 28,149, and now we're about 500 or 600 off of that. So very concerning stuff going on here today. We'll pause right here, and Brian will come back and we'll take a look at our livestock market action and the energy markets as well when we come back. We're talking with Brian Hoops right now. He's with Midwest Market Solutions in Springfield, Missouri. By the way, sounds like wintry weather in Kansas. I heard the Interstate 70 was closed west of Salina due to winter weather. Brian, how much impact could that have here on the livestock?
Well, it should have a positive impact, especially on some cash markets this week. But so far, the futures have chosen to ignore the positive cash trade last week, higher box beef yesterday. We're just focused on what the stock market is doing. When the stock market was higher near the opening bell, cattle futures were willing to trade higher, and since that market has plunged, cattle futures have followed suit. And it looks like this week's cash is going to be sharply lower once it develops because of what the futures market has done. But I have a suspicion the feedlots will try and hold off for at least a week or two and see if we can get some sort of a recovery, and that may back up cattle for the near term.
And we've been talking about it here on the set. It was about exactly an hour ago right now from this moment that everything started to turn in February live cattle, now down $1.15. The April down $1.08 at 114.17. We're within a dime of our low of the day now. June down 65. So the nearby is leading the way down here at the moment. And in the feeder cattle market, let's look over there. Feeders were higher early on today. Well, not anymore. You have April now down $1.42. We're at 136.18. Now remember, we're in expanded limit mode today because we closed almost all the contracts limit down yesterday. So that's a concern out there. May down $1 at 137.35. Now the deferreds are not as much to the downside. If you look at the lean hog market, lean hogs were not limit down yesterday, but they were sharply lower. Today they're trying to rally on the nearbys, but they're having a hard time hanging on. April up 33 now at 64.95. Well, that's only one tick from our low of the day. The May up 25 at 72.13, also one tick from its low of the day. June has turned lower. July down by a dime now. On the cattle and hog markets here, when you look at the cash portion of it, you talked about maybe a lower cash cattle trade this week based on the futures action. What do you think on the cash hogs here?
Well, that same snow system, getting a little bit of movement into the upper Midwest, that could disrupt some of the cash hog movement. So I would think we're going to be at least steady in the cash hogs. But, what we're seeing in the futures market is a lot of fund trade. You can see the April contract where most of the fund activity is, in the cattle. That's where most of the selling pressure is coming in here. And that's an indication that the funds are liquidating some long positions.
A quick look at our crude oil market, if I could. Crude oil has been coming under pressure again as well. Check this out. April now at 50.58. We're down 85 cents once again after it got up over 52 bucks earlier this morning. So everything making a big reversal here about an hour into the session. Thanks, Brian. Appreciate the time. Brian Hoops, Midwest Market Solutions in Springfield, Missouri. So all hands on deck. Keep a close eye on what's going on. And that's why we have live quotes right here.
That's exactly what I was going to say. You stole the words right out of my mouth. Thank you, Marlon.